Greetings, everyone. This is RKrivo with our chart drill down for Tuesday, January 24th, 2017. It's been a few months since my last posting, and now that the holidays, the U.S. election, and the inauguration are behind us, I'm looking forward to posting a chart drill down on a more regular schedule. Ideally, what I'm shooting for is on a weekly basis. That being said, I would like to introduce an additional aspect to each YouTube video, and that is answering your trading questions. Whenever you have a trading question, email it to me at RKrivoFX@gmail.com, right here, and be certain to put YouTube question in the subject line so it stands out from the other emails. I'll be able to identify it straight away. Now, if there are enough questions each week, I will devote an additional YouTube segment each week to answering them. So hopefully I'll be doing that quite a bit. Now, remember, as always, my objective in each of these chart drill down videos is to show you how I go about identifying the strongest trending pairs, those that are more likely, though not guaranteed, to turn into winning trades. Now, if you have any questions about any of the indicators I use on my charts or why the charts are set up the way they are, refer to the email dated May 11th, 2015 in the YouTube videos, and it's entitled Chart Tutorial, and that'll give you an explanation. Any other questions? Feel free to email me. Now, remember, these charting drill downs are for instructional purposes. They're designed to show you how I identify higher probability trading pairs. Any of the setups that I show you by no means guarantees that they will ultimately turn into a winning trade. I'm simply showing you what has worked for me, and it may or may not work for you. And that's strictly based on the idea of the trader's mindset, the psychology of trading, that type of thing. You can learn a lot from looking at a specific strategy, but you can't get inside that particular trader's head to gain all the experiences that he or she has had over the years that they've been trading. That's something that's learned as you go through the process of trading. Now, trading is all about probabilities, identifying a trading edge, something that we can exploit. And it's designed to provide us with a higher probability trading opportunity, that edge. And the more of those edges we identify, the greater the likelihood we may be profitable at the end of a week, a month, a quarter, or a year. With that, let's quickly go over the disclaimers. I won't read them in detail. Essentially, it's just trading foreign exchange involves significant levels of risk. You should only be trading with risk capital, money that you can afford to lose. There's a high degree of leverage, and that can work both ways. And the content I'm providing is for informational and educational purposes only and is not intended as specific trading recommendations. Okay, let's get ready to take a look at the charts here. As some of you may recall, I use a strong weak currency analysis each day to point me in the direction that the pairs are in stronger trends, the direction of those particular pairs. Now, should you want to know more about that, again, email me, RKrivoFX@gmail.com. Now, the most recent strong weak currency analysis I did was about 15-20 minutes ago. It indicated that the Aussie dollar was the strongest currency and that the US dollar was the weakest. So that's my first stop as I drill down the chart. So that's why we have the Aussie US dollar up here at this point. And what I'm looking at, just to identify some information on the charts for you, this is a weekly, this is a daily, this is a 4-hour, 1 hour. I use multiple time frame analysis. The channels that you see, the channel lines that you see on each chart are called Donchian channels. If you need more of an explanation on that, feel free to email me. The green line on each chart is the 200 period simple moving average. And then I have slow stochastics on my chart, and they are set to 15, 5, and 5. So what I'm seeing here, let me expand this. Hang on here 1 second. There we go. Let me expand this weekly chart for you a little bit. Now, what I'm seeing here is price action has touched the upper Donchian channel right there and has taken out the lower channel, which indicates, based on true Donchian channel strategy, that this pair on the weekly chart is in an open sell position. On the weekly chart, we'd be looking for selling opportunities. However, that being said, we can see that for the last 1, 2, 3, 4, and this is the 5th week we're in right now, the pair has been moving smartly to the upside. But based on the Donchian Channel strategy, it still is not in an open buy scenario based on the weekly chart because it hasn't taken out the upper channel. What we do see here on the longer term chart, the longest term chart we're looking at, the weekly, is that slow stochastics has excellent angle and separation to the upside, indicating that there is more momentum that likely, though not guaranteed, is going to push this pair even higher as the weekly chart continues to go. So based on Donchian Channel strategy, I'm still looking for selling opportunities, but I'm getting a signal down here that there is more momentum to the upside that potentially price may at some point take out that upper channel. Okay, that being said, I'm going to go over to the daily chart. Now here we see that price action indeed has taken out the lower channel, and it's bounced off that lower channel once it bottomed out here, and then it's moved up and has taken out the upper channel. So based on Donchian Channel strategy and on the daily chart, we've got a situation where we're in an open buy. So what that means is we are going to be looking for buying opportunities on the lower time frame charts, the 4-hour and the 1-hour. We also see that slow stochastics is above 80, and that's a situation that could endure for a long time. A lot of times when people see slow stochastics get above 80 in the overbought area, they immediately think, uh-oh, it's time to sell. Well, it can stay up there for quite some time, and the signals on this daily chart right now are bullish for sure. And we've also got price action above the 200 period moving average, which means that, again, it's on this particular chart based on that 200 period moving average relative to price action, it's a bullish scenario there as well. So now our job as traders is let's go down to the 4-hour chart and the 1-hour chart and look for opportunities to get into this pair at some point long. Now, when we look at ideal Donchian strategy, what I want to see, I'm seeing it better, what I'm looking for here on the 1-hour chart than I am on the 4-hour, and I'll explain why in a minute. Ideal Donchian strategy is going to indicate that in an uptrend, the best buying opportunity is going to occur when price action has taken out the upper channel, moves down, touches the lower channel, and then comes back up and takes out the upper channel. That's the ideal buy signal in that situation. Well, we had a pullback here. Okay, it obviously didn't get to the lower Donchian channel, but it was a pullback nonetheless. It wasn't just a little, hiccup in price action like this is a little one right here. I much rather see a more robust pullback in an uptrend and then buy as after, in effect, the pair has reloaded and then comes back up and takes out the upper channel. Let me show you a little bit on this chart by going back what I mean by that. Here's a situation where right down here, I'm not sure how well you can see it. Let me enlarge that a little bit more. See where price action has taken out the lower channel right here, oscillated around a little bit, and then right there took out the upper channel. Based on Donchian strategy in an uptrend, we're looking for price action, as I said, touch the lower, take out the upper, bang. That's my entry right there. Just that little wick that pushed up the upper channel. That's it right there. And then my stop goes below the lower Donchian channel. So my entry was at, what do we have here? Roughly about 72.19, and my stop would be at 71.57. So roughly a stop distance of, okay, so about 60 pips, give or take, right around in there. Now, let's go to where the pair is right now. I'd still like to keep that one online so we can see it here, or in view, I should say. Okay, here we go. So that was our entry right back there. And price action since then, since that entry, has moved up about, let's see, 386 pips. Now, one of the nice things about the Donchian Channel strategy that I like is it forces you, if you follow the strategy, to keep your stop quite a distance from your entry. In other words, you're giving the trade room to move, you're giving the trade room to develop, If you're setting your stop at 5 pips, 10 pips, 20 pips, 30 pips, something like that, that's normal market action. That's the market breathing in and breathing out. You're going to get stopped out a lot. I don't know if a lot of you have experienced that or not. But you're being cautious, but you're being, in my opinion, overly so. So in this situation, when we got in, we had a stop of about, like we said, 60, 70 pips, somewhere in there. And on the Donchian strategy, when you follow it truly, you put your stop below that lower channel. And then as price action continues to move up, if the pair is in an uptrend, okay, you just, when you check your charts and you're trading off a 1-hour chart or a 4-hour chart, you don't have to be sitting in front of your computer every second. You can come back and check it, once or twice a day. And if you see that price action has moved up and the lower Donchian channel has moved up correspondingly, just move your stop up so it's just below that lower Donchian channel. So you come back to your computer here, you move your stop to there. You come back to your computer here, you move your stop to there, and so forth. Now, what some of you may have noticed is we entered the trade here, our stop's down here. At no point did price action really come close, a little bit maybe right in here, but it came within, what do we got? Okay, closer than I eyeballed it. It came within 10 pips, but it didn't hit our stop. So technically, well, actually, we'd still be in the trade. Now, does this happen every time you use the Donchian Channel strategy? Absolutely not. But it's forcing you, if you follow the strategy, to give the pair enough room to breathe. So you're not getting stopped out every single time you turn around. Could you get stopped out? Could you have many losing trades in a row? Absolutely. But the beauty of this type of strategy is it's going to put you in trades that are trending and keep you in a lot of the trades for a long term. So all of a sudden, let's say we got stopped out right down here at 60 pips stop out. Okay, we lost 60 pips. And let's say we got stopped out another time for 60 pips. Let's say we got stopped out a third time for 60 pips. That's 180 pips lost, okay? We had 380 pips that we made on the trade thus far once you catch a move. And they don't happen all the time. They don't happen every time, certainly, but 500 pip trades, 800 pip trades, 1,000 pip trades, those can cancel out a lot of 50, 60, 80, 100 pip losers. And that's what the Donchian Channel strategy kind of sets you up for. It gets you in the rhythm of these pairs that are trending for the longer term and puts you in step with the market on those trades. And again, you've got the potential of many hundreds of pips, and you're going to take some losses along the way. But the ideal situation, again, is cut your losers short and let your winners run. And that's what this strategy is designed to do, which is one of the reasons why it is, it has been pretty much my absolute favorite strategy over, I'd say I've been trading for 16 years, and I'd say this is probably about the last 8 that I've really gotten in step with this particular strategy. And how I decide on the pairs that I'm going to trade, the first thing I do is that strong weak analysis, and then I immediately go to those particular pairs to see if there's a setup. If there wasn't a setup, even though the Aussie dollar was the strongest and the US dollar was the weakest that I saw, if I didn't see a setup, I'm not going to be trading it. But it points me in the direction of the pairs that are in the strongest trends at the time. That's what I'm looking for. Okay, if you've got any questions, please feel free to email me at RKrivoFX@gmail.com. And, as I mentioned, put in YouTube video questions or something to that effect so that they stand out when I check them out. So thanks a lot for attending, and look forward to your attendance next time. Bye now.